Hello and welcome to Blocks Populi, blockchain of the people. I'm your host, Brandon Lovejoy. This is a Cryptowriter podcast, and today we are joined by Phillip Hamnet of Chintai. He joins us for hopefully the better part of an hour, and we're going to see what we can learn about what they've been building over at Chintai. Phillip, would you like to introduce yourself and just tell us how you got into this space and a little bit about who you are, so for the viewers at home?
Sure. So thank you for having me on. It's a pleasure to be here. So yeah, I'm the CTO of Chintai. I'm in charge of like all the tech side of everything that we're doing and building here, and obviously we'll talk about that a bit later on. Originally, though, I was a physicist before I got into programming and eventually blockchain technology. So I was working at the Large Hadron Collider in Geneva. That's the underground tunnel where they spin smash particles together, searching for new fundamental particles of physics. And I did that for a number of years. And the majority of that work was actually like data analysis. So that's really when I got into programming properly and realized that I was quite passionate about it. And then when I finished my work there, I went on to work basically for Airbus or for a subcontractor of Airbus. And there I was working on like technology within airplanes. I did that for a number of years. And then by matter of pure luck, basically, or chance, I happened to quit my job because I was moving to a different city with my wife. And one of my best friends contacted me and said, "Hey, I'm starting a new company. It's called Chintai, and we'd love it. I know you're looking for a job. Would you be interested in joining? It's using blockchain technology and it's in cryptocurrencies." And I was like, I don't know anything about blockchain or cryptocurrencies, but why not? And I started it and got into it, and I've been here ever since. It's been a hell of a journey.
I bet it has. Yeah. So also you were involved, and maybe you still are involved as CTO of EOS42, which is a block producer on
Right. Yeah, that's true.
EOS.
Yeah.
So you wear that hat as well. And yeah, what do you think about the latest intrigue in the EOS space with the EOSX hack and the whole intent of code versus law, of code is law versus code is law, and all that? Where do you fall on all that?
So the position of EOS42 has always been that we should basically enforce intent of code is law, and we actually pushed for that in the past. I'm talking now already. God, it must have been I assume about 2 years ago already. That we were pushing for this with the block. We were an active block producer at the time, I believe, and we were pushing to like change the keys on hacker accounts in order to protect the funds of people. And we think this made a lot of sense because like the vast majority of people in the world won't use a blockchain technology if the mistyping a single key might mean that you could lose your entire funds, or like a single mistake is simply irreversible. Like that's not how the real world works. You've got to allow for a human mistake. And if you wanted the EOS blockchain, EOS mainnet to be the blockchain of the masses, then you need this ability, basically. So we pushed for this for a long time, and I'm very glad that this is actually that the funds were recovered in this case by the block producers. I'm very glad that they've finally taken that step. I am, however, disappointed that it was essentially like the block producers' own system that was hacked, and it took that for them to finally come to the decision to make this move. Because these same people who in the past were saying this is not possible, the ideology is code is law, suddenly in the moment when it was their funds or their reputation that was affected, decided that actually the intent of code is law is the way to go. So I'm a bit disappointed that that's the catalyst that finally made them make this move. I hope that they continue to stick with this now. I hope that there's some transparency in the future about like when they will intervene and when they will not, and under what circumstances. For example, I can understand if they don't want to get involved when someone accidentally changes their keys or something like that. I can get that doesn't scale, but like and I can understand as well that they don't want to, for example, recover funds when your account has been hacked or when your smart contract has an exploit that is a known exploit, right? For example, because you should have wrote better smart contract code. But for new exploits, for things that have never happened before, I can imagine that being a reasonable course of action. But I think it doesn't really matter necessarily the details about what happens as long as it's very clear to like the community. I think that's the most important thing. And it's not like a one rule for some people, a different rule for everyone else. Like that would be obviously against the whole point of blockchain in the first place, right?
Right. Yeah. This was spoken about at some length yesterday on Dan Larimer's AMA on Telegram. Yeah, just looking at how this is applied or not applied, and what scales and what doesn't, and how we can protect the network. Yeah, I hope that this is applied consistently going forward, and I think
that's the key.
Despite the whatever the motivations, this time around, I mean, it was a big hack. It affected a lot of people. Yeah, if we can move in this direction, I think it'll be positive for the EOS blockchain.
100%. Yeah, the ability to know that, like, if you screw up, it doesn't necessarily mean that your world has been destroyed, that you've been completely wrecked by it. It is something that I think is missing from blockchain at a like kind of fundamental level right now, and it's something that 99% of the population needs.
Do you
Like
think the rest of us,
sane person would ever use a system like this? Like,
are we just crazy for living on the edge of
right? Yeah,
the
exactly.
blockchain space this whole time, with believing everything could be risked in a moment?
Yeah, exactly. We are a bit mad that we live in the world where that's like normal, right? Of course,
Yeah.
you have to be.
Yeah, here we are.
Here we are.
Well, hopefully, yeah, those tools will evolve. And I just saw somebody shared a video of how to use email in 1984 on Twitter somewhere. I saw it, and it was hilarious because you got to connect to the modem with your phone set and put it on the receiver and connect with the tone, and then you receive the messages, and then you send the messages. And I'm like, okay, email used to be just as bad as blockchain is now. There was a point where it was so ridiculous and everyone's like, no one's ever going to use that, that's just too much trouble. And now look at it, so
Yeah, exactly. Like that's the way all technology goes in general. Like the longer it exists, the more tools are created to help the people who both use it and also develop using it, right? So things only ever get easier, hopefully.
So on to Chintai. Is it Chintai or Shintai? How do you guys pronounce it?
Chintai.
Shintai.
SH.
Okay, there's probably no ch sound in the. Yeah. And I knew this at one point, but what is the meaning of Chintai?
It means leasing. Because originally we were a leasing exchange, right? Like we were the Rex before Rex existed, right? Like we allowed EOS token staking on behalf of other people. And we actually got the EOS network through like a pretty tough time right at the beginning. Like it was a good problem to have for the network, right? Like the amount of activity and usage it got was huge with all these gambling dApps right at the beginning. But there was no market or mechanism by which you could borrow or lend resources from each other people, and that's what Chintai initially did. We pivoted from that after the Rex was released because it was impossible to compete with that, and that eventually led to the things we're doing now. But initially, that's where the name comes from. It was leasing in Chinese and Japanese, I think.
So Rex, for those who don't know, is the resource exchange on EOS, which, yeah, Chintai was essentially performing that functionality before it became kind of an innate part of the setup with EOS. So good to know you guys are always ahead of the curve. So what gets you up in the morning? What motivates you to do what you do every day?
So for me, it's important to like that what I'm doing is providing value to the world, ideally at scale. So like one of the areas of the world that I see as having a big problem right now is this sort of like gap between like the rich and the poor, right? Like that gap is constantly increasing, and there are many reasons for that. Like concentration of power leads to more concentration of power, but one of the things which is solvable, at least partially, is the concept of the rich have access to opportunities that that the poor don't have access to, simply don't have access to. And like what gets me up in the morning right now is the fact that I'm trying to close this gap by working with Chintai to make fair opportunities to everybody, so that even if you've only got $10 to your name and you want to invest it in something, you have the ability to make that investment, and you're not restricted from taking part in systems simply because you don't have like a certain threshold of cash available to you, for example. So it's really, for me right now, about social mobility, and allowing people the opportunity to climb that ladder if they want to, where a lot of the times that ladder is taken away before people even realize it's there or could be there.
Cool. Yeah, providing access to financial tools that are not normally available to retail investors, let's say.
Sure.
Okay, so let's get a few things ironed out before we dive deeply into Chintai. So you threw some lingo at me in an earlier conversation, and we'll treat this like a glossary.
Okay.
So, because what Chintai does may be a little bit outside of the realm of most people's, it's something they think about on a regular basis. So, well, first, just give us like a really brief summary of how you would describe the services that Chintai provides, and then we'll break it down.
Okay. So Chintai is providing the ability for institutions and companies to tokenize real world assets and allow investors to buy and trade those tokenized assets. Like in a sentence, that would be it. Or I would add maybe in a compliant way, which is a very big like ask for a very small sentence. Yeah.
Yeah,
So,
and briefly on that compliance note, so you all where are you at with compliance, and where are you licensed and regulated?
so we're still in the process of applying for licensing with the Monetary Authority of Singapore, the MAS is how we refer to that. We're applying for 2 licenses, an RMO and a CMS license. RMO is a retail market operator, I think, and CMS is Capital Market Services license. Essentially, it's the ability to to create an asset, and the ability to trade an asset. The 2 kinds of asset licenses we're applying for right now. Yeah, and those applications are in process.
Cool. I mean, it seems like things must be going well. Seems like your conversation with the regulatory bodies in Singapore are friendly.
Yes, we've been in contact with them for a long time now. We're going jumping through the hoops and all that stuff, but we're making progress on that, and I can't tell you specifics, like when we'll have that license or whatever, but like I can just say we're doing it.
Awesome.
Unfortunately.
Okay, so what is an equity token?
Okay, so yeah, so this is something that requires some explanation. Like we have various kinds of tokens that we will be creating on our platform that represent different kinds of things, right? So one of them is an equity token. Then there's like a real estate token, debt token, and possibly other tokens as well, like commodity tokens, for example, if they could be their own class. An equity token essentially represents a real world asset that would typically be something like shares in a company or something to this effect. So it's a token framework that we've built for Chintai for our blockchain. And what it allows is a lot of fine granular control on how like tokens can be used on that platform. So for example, if you own shares in a company, you could expect obviously that you can trade those shares, like you could with any token. You've got to be able to transfer it, right? But as the issuer of that token, say as the company issuing shares, you might, for example, issue shares to your employees with the caveat that like they are vested for a period of time, right? So maybe, for example, you get 5% of your shares after you've been here for a year, another 5% after 2 years, and so on, right? This can be either like at a fixed point, like you've been here for exactly 1 year, here is 5%, or it could be like a gradual continuous thing, like every second you get a fraction of a share, so that after a year you've got 5%. We've built that functionality into the system directly as well, so that's all in there. The ability to do things like paying dividends. So when the company earns profits, they can distribute that to the shareholders. Buybacks, built-in buyback system, and obviously, like one of the perks of having shares in a company is voting, right? So voting rights associated with tokens as well. And that's like sort of the functionality associated with an equity token specifically. The only other thing I would say about equity tokens is that we have, as with all the other token classes, the due diligence documentation directly stored in the token class itself. So like on EOS, tokens are essentially within a smart contract. There's a smart contract that controls all the things that happen with a token, who owns it, what actions you can perform with it, and so on. And the same is true with the tokens in our framework. So with the equity token, you might, for example, be interested in knowing like the financial details of the company, and that information is stored on the blockchain in the token contract itself, so that you can come to the platform and see sort of like the most up-to-date live information for due diligence as and when you are ready to trade, for example.
Okay, cool. So that's the equity token.
Mm-hmm.
And then you mentioned a few other tokens. So what's a tokenized commodity? How does that work on Chintai?
So this would be essentially something like gold or oil, anything like that would be a commodity in like the normal stock markets, right? With this kind of token, it would be something like if you had gold and you wanted to like tokenize that and issue that, you would have to provide like evidence of owning that. Then like in principle, we could do an issuance of that token, and crucially, there must be the ability to collect or claim that real world asset in exchange for the tokens down the line if you wanted to. So other than that, like there's no voting rights associated with something like a commodity token. There's no due diligence because gold is gold, right? Like the only due diligence would be, for example, knowing like the evidence of who physically has possession of that commodity, and whatever else associated with that needs to be told. Like for example, if the commodity was whiskey, you would want to know how old is the whiskey, like how long has it been maturing, things like that, right? That would be dependent on the specific commodity being tokenized. But yeah, like that's the kind of information that would be there in this case.
So does this imply the need for another party to certify or to regulate the veracity of the claims of the commodity holder? And who would fill that role, do you think?
It almost certainly would do. And honestly, I couldn't tell you who at this time, because commodity trading is something like I've thought about and like we can implement. But right now, like we're focusing on the areas where we're getting like the most demand,
Mm,
and that's actually real estate and debt issuance right now, more than
okay.
commodities specifically. I've
Okay.
had like one or two people ask about commodities, but it's really like
It's kind of an edge.
it's kind of it's one of those things that like we'll eventually get to,
Hmm.
but it's not, for example, the highest priority for us right now. Right now, the highest priority is real estate and debts.
Okay. Yeah, I like commodities just because I can think about it really easily because you're talking about real world
Mm.
uh, stuff that could be leveraged and tokenized. Okay, so let's get into debt tokens. What are debt tokens?
So a debt token is more likely to be used by a more well-established company. Like if you're like a startup or something and you want to raise capital, you would almost certainly tokenize an equity token, because no one would trust that you'd be able to like pay back a loan as a startup, if you said I wanted a loan, right?
Hmm.
Um, it, yeah, people would want shares in your company and they'd want like the profits of that down the line. If you are like a more well-established company or like a somehow reputable company, you might, instead of giving away shares in your company, you might instead say, you know, lend me $1 million, and in a year's time, I will give you $1.2 million back, right? Um, by issuing a debt token, what we can do is we can basically say, here's a token sale. We want $1 million, and for every dollar you give us, we'll give you one debt token. And like owning that token gets you the rights to the interest payments when they are made. Whether that's like that there's lots of ways that debts can be repaid. They can be, for example, nothing at all, but then at the end of the year, 1.2 million all at once. Or it can be every month some amount of the interest is paid, or any combination of things like that. But whoever owns the debt tokens will receive that interest, and then at the end of the loan, when the loan is to be repaid back fully, the company will essentially buy back all of those debt tokens from everyone in exchange for the initial like dollar that was given per token. And then
Cool.
the beauty of this is, like, if, say, for example, um, the company appears to be doing worse than everyone expected, and people start to lose confidence that that they can actually pay off the debt, then this debt token is tradable. So, I might trade it to
Mm.
you for 90 cents on the dollar, in order to, secure a minor loss, and you take a risk on, a larger profit down the line, right?
Hmm. That's interesting. Yeah, you kind of end up selling, well, maybe not bad debt, but uncertain debt.
Yeah,
Um,
and it can work. It can essentially act as a indicator for confidence in the company, right?
so, okay, so we'll get into real estate in a second because I know that's kind of where you guys are focused primarily right now. But help me out with bonds because I feel like we just kind of drifted into bonds a little bit, at least.
Mm.
Like there's some relation between, I mean, isn't a bond essentially a debt token or how?
Yeah,
Yeah.
yeah.
So how do bonds work and how do you envision Chintai, um, you know, offering access to bond markets?
So a bond, yeah, a bond is a kind of debt token, where debt tokens can typically have things like variable interest rates and stuff. My understanding is that bonds are kind of fixed interest rate debt tokens. So the idea is, with a bond, it would be, the example I gave was an example of a bond. I'll borrow $1 million, I'll pay back 1.2 million. Everyone knows exactly who's getting what and when.
Hmm.
Whereas other kinds of debts might be with variable interest rates, for example, that depend on external factors where you're not entirely sure how things are going to be changing over time, or the debt might not have like a fixed limit. So it might not be, I will pay you back after a year, but like, I would like to borrow this money, I'll pay interest every month, and eventually I'll pay off the debt, right?
Hmm.
Could be something like that. But a bond would be one of these where it's kind of very fixed. It's I'm borrowing this amount for this amount of time, and I'll pay this much interest, and those things are all fixed and known. And so it's kind of like I guess you typically would use that as like a hedge. If you're not confident about like the markets, but you wanted to therefore like park your tokens somewhere where they can earn an income and be relatively steady, that would be the way to do it.
Okay, so
Not financial advice.
yeah, I feel like we should all just get that tattooed on our forehead.
Right.
Okay, so can I tease anything more out of you about bonds? Like, it's still a little bit hard, I think. Well, for me, for sure, and possibly for people listening. I mean, we hear about bonds like the U.S. selling treasury bonds or things of that nature, but I think you and others on the Chintai team have indicated that bonds are going to be where, maybe where you're going after real estate, or also simultaneously pursuing bonds. But like, what's an example of like a company or a government or somebody that would actually use Chintai with bonds? Or can you tease out anything?
So what would be a good example of this? Like, say, for example, you've got a company. They have a regular profit. Like every year they're making, I don't know, say $10 million a year or something like that in profits, and they're happily chugging along like this. They want to grow. They want to expand, and they want to, say, for example, go on a big marketing drive. So what they do is they say, okay, we want to do like a $20 million advertising campaign to really like spread out across the world and like get out of, say, for example, the Singapore area and into the European market or whatever. It can be anything like that. But they don't have $20 million lying around like they can just spend on this. So that would be a prime example for someone who might want to do like a bond issuance. They could say, hey, look, we've already got $10 million a year we're making in profit. We want to borrow $20 million. So let's say over 5 years, we'll pay back $25 million. So there's $5 million in profit to be made if you lend it to me over 5 years, right? We should comfortably be able to give you that 25 million, like, because we expect our profits to only go up from here, not down, right? And so that would be like the kind of customer we would expect, for example, to be using like the bond market. And obviously, like the scale of that can vary massively depending on the companies involved, right? If you don't take these names now as like names that are people who we're talking to, that's not the case. But like if Google come along, for example, and they said we wanted to like have bonds, you would expect that to be like in the billions of dollars range, right? Presumably, because like hundreds of millions they have lying around. They don't need to borrow that kind of money. Whereas you can also imagine like small, medium enterprises might also be interested in borrowing $20,000 or $100,000, and there could be anything in between that as well, right? So I think it's probably the most versatile marketplace. I know that the general marketplace for bonds, like in the real world, if you like, the non-crypto space is in the trillions of dollars per year. It's a huge marketplace. So I think it's probably one of the more interesting ones, just because like it's you have these things like the DeFi yield farming and stuff, right? And they get these huge APR, APY, like huge interest rates of like 70-80% or whatever. But like by definition, that's not sustainable. Like that's coming from like the inflation of the token or some additional money that's being pumped into the system that literally can't long term succeed, because that's just like the world doesn't work like that.
Value has to come from somewhere. Yeah,
exactly. And eventually that house of cards is going to come crumbling down, and someone's going to be left holding a token that's worth nothing, right? Presumably. So like this is probably one of the first examples of you being able to like get a sustained passive income by holding a token. Yeah, and the price of that token being relatively stable as well, right? Because if you know, for example, if you're borrowing $1 million and you're going to return $1.2 million, and each token is worth $1 when you buy it, it will never go above $1.2, right? Because that, like, at the
Right.
end, the reward you're going to get is not going to be worth more than that. So you know it can't ever go above that value, and like as long as the company looks solvent, it shouldn't really go much below $1 either. You know, it'll go below because someone needs access to their, you know, liquid capital right now, you know, and they have to sell it. But typically, it's going to kind of be quite a stable token with a passive income associated with it.
Okay, cool. Thanks. Yeah, bonds are kind of, I think, not in most people's minds when they think about crypto, or in terms of retail investors, it's just not something that pops into your brain usually. But yeah, as you mentioned, it's maybe more of an offering for large scale enterprises. And
yeah, well, I think this is the thing. Like typically, like if you want to issue bonds, like it's going to be for, like in normal world, it's for large amounts of money, and it's provided to you by other institutions who have large amounts of money. So it makes sense that retail investors don't really think about it much because it's not something that goes onto your, you know, your map, so to speak. You don't see it. But this is the part of the beauty of tokenizing it, right? Is the efficiency gain means that there's no reason to not do it with small amounts of money if you wanted to. Like it's very impractical to try and do bonds with small amounts of money in the real world because of the compliance and regulatory aspects of it, and the amount of paperwork, and making sure that, like, you know, who has the bonds at any given moment is just so much work that it doesn't make sense to do it with anything less than, you know, millions and millions of dollars. And this is part of like what I was saying at the beginning, that by making the system scale, like in both directions, both like for very large amounts of money, but also very small amounts of money, you allow people to apply for bonds who previously couldn't apply for them. So small to medium enterprises. And you also allow retail investors to take part in those bonds, even with very small amounts of money.
Gotcha. Yep. So removing that barrier and scaling, and you could probably say a lot about, I think you just touched on the gains that, you know, both small and large businesses can achieve through minimizing the friction in terms of compliance and other things that Chintai will be able to provide. There's what, billions of dollars in savings to be had. Could you talk a little bit about that?
Sure.
Why that is?
Yeah. So compliance in general consists of many things, like factors. Some of them Shintai can help with, some of them we have no control over. So an example of something we have no control over is GDPR compliance. This is a European law that says data has to be protected and private. So like this has nothing to do with Shintai. It is a form of compliance. It's very expensive, but it's not our problem. Like it involves things like, you know, the ability to delete your private records. So if you request in Europe of Facebook, hey, I want you to get rid of like all the information you have about me, they legally have to do that if you're like a resident of Europe, and show that they do that, and that's expensive to do that kind of thing. So there's like all kinds of compliance like that has nothing to do with us. We cover more the aspects of compliance related to like financial assets, and a simple example of that is the concept of KYC, know your customer, right? There are countries that are sanctioned and blacklisted and not allowed to take part in general kinds of trades. You have to make sure that that assets don't end up in the hands of people from these countries. North Korea is a typical example for this, right? So you can't let people in North Korea have these assets, because the fear is that that they're going to use these assets to fund terrorism or for money laundering purposes. So like that's a typical standard example of compliance that we do have control over at Shintai. There are lots of others as well. Some of them are very obscure, like for example, short selling reporting. So this is something like most people wouldn't even think of, but if you own more than 3% of equity in a company and you short sell that company, you have to report that to the authorities. Like it's like if I started shorting Chintai, like that's a bit dodgy with me, being one of the major shareholders of Chintai, right? Like so that's not something that people typically do, and if you do it, you have to report it to the authorities so that they can be aware of that. Things like that, Shinta has some control over. So what we do is we automate on chain all the hard rules for compliance that are linked to the financial trade life cycle system. And in doing that, we estimate that we would save the average financial institution something in the region of about $8 million a year. And the larger ones, like we could save them up to $100 million a year on average for the very big ones. So there's like a very large incentive for institutions to move to this. And we are, to the best of my knowledge, the only platform that's offering this in the way we are, with the full compliance being on chain. And this is important because essentially it boils down to being able to show the government that you're following the rules, right? That's what it all boils down to. Are you following the rules? And like the first thing you can just do is say, yes, I am. And then they go, okay, great, prove it, And you say, well, here are the list of your rules. And here you can see that like we checked every box, we did everything you said. And then they go, okay, you've said here that, that this transaction was compliant. How do you know? And then you keep asking this question over and over again. And this is too much for any company to handle. You end up getting auditors coming in to do this, right? Specialized companies that they spend all their time doing this stuff. And that's where the real cost comes from. So you might say, okay, well, we can automate the system, right? You can take, for example, you can have like a blacklist of countries that aren't allowed. If someone tries to make a trade to someone who is recorded as being from a blacklist or has no recorded location, block it from happening. And that would work. And then you'd say, okay, good. How do I know that your code works? Like, how do I know that there's not a bug or an exploit in your code? And then you can get the code audited by like professional code auditors, and they'll say the code works and everything's great. And then you finally get to the ultimate problem, which is if you're not doing this on a blockchain, the database administrator, someone somewhere has the root password, right? And they can go onto the system, onto the server, and simply change the numbers and say, this guy in North Korea now has tokens that he shouldn't have. Bypass all of the automation and all the rest of it. Someone can do that, guaranteed. And if that's possible, the question is, how do you know someone didn't do it? And then the answer is you can't know that. The only way you can do that is with a blockchain. Right?
So for the benefit of companies that need to go through all sorts of compliance and regulatory fees and accounting and auditing and all this stuff, Chintai will provide a platform where a lot of this stuff is done automatically, and the you take that burden off their plates and save them. I don't remember if you said millions or billions of dollars a year, but like
millions, typically millions of dollars.
Yeah.
I don't know. Maybe the biggest companies would be billions, but
okay, yeah.
I don't know.
What's another zero or three?
Yeah.
Okay, so you mentioned, well, I don't know, like, you might have to like help me disambiguate these two things, but because I'm sure Chintai is also privately held. You all have equity in the company, but you have a token as well, the CHEX token. What function does the CHEX token play, or what many roles does the CHEX token play in the Chintai ecosystem?
Yeah, it plays a lot of roles. So where do I start?
Well, yeah, start with like the most basic. I mean, maybe let's talk about. I mean, you could start from the beginning.
Yeah.
When it was first introduced, and
Yeah. So now I'll start with the future functionality because it's what's really important
okay,
and where we're going. So
okay,
institutions who use our platform will be required to lease CHEX tokens proportional to how much they use our system. So I give you an example of what I mean. There's three institutions on our platform. One of them has one token on our platform, which is never used. It has basically no volume. It's not traded. That guy basically leases 0 checks from us, or next to nothing from us. We got another person on our platform. They also have one token that they've issued on our platform. Huge amounts of volume, huge amounts of usage. That person needs to lease and borrow a fair amount, like a proportional amount of CHEX tokens. We got a third institute on our platform. They have multiple tokens. Each of them has some usage, but nowhere near like this middle guy who has huge amounts of volume. But he has like maybe this last guy, he's a debt issue, like he issues like debts or something, and he's got like 100 or 200 tokens on our platform that he's issued. And each of them has low volume, but collectively the volume is quite high, and he would also have to lease a proportionate amount of CHEX tokens in order to use the platform. So this is
when
one of the things.
when you say proportionate, you mean in terms of, is there some sort of ratio collateral value in like dollar terms, or is it when you say on what?
Yeah, it's proportional to the other people using the platform. So if 99% of the activity on our platform comes from you and your token, then like 99% of the tokens leased will be by you, so to speak.
So in that sense, CHEX is kind of like a utility token on.
Yes.
In terms of resource usage of the
Exactly.
Chintai. Okay.
Exactly.
Platform.
It's for resource usage from the perspective of the issuers. And yeah, like the exact numbers have to be decided still for this. Like we're testing all that stuff, but essentially, yeah, that's how that works for an issuer. Now, from the perspective of an investor, like someone who's using the platform to do trading and taking part in token sales and so on. And by the way, these are the terms I will use: issuer, someone who's creating tokens, creating marketplaces, etc., is an issuer, and then investors are people who are taking part in token sales, trading on secondary markets, things like that. So on the investor side of things, like resource management is actually done through our website without you ever noticing it. So on our website, I said it before, like that compliance is done on chain. Something I didn't make clear is that everything is on chain, like absolutely everything. When you register an account with us, we create a blockchain account for you. When you perform an action, whatever that action, like when you do anything, we record that on the blockchain as well, whatever it is. Now, this is an EOSEO blockchain, so it has the issues of CPU, NAND, and RAM, etc. But we basically decouple that from the customers, the investors. They basically never need to know about this because whenever they do something through our website, we will pay for the resources for those users. So there's no need for like external wallets like Anchor or Wombat Wallet or anything like that. It's all managed through the website. The website has an internal wallet system. The only thing that you can't do directly is you can't set up trading bots, because part of the way our website works is, like, if I get technical just for a second, is we will basically pre-sign transactions, which is how we pay for your resources. If you click a button on our website, if you, however, create a bot which is designed to trade behind the scenes, like not through our website, then we wouldn't be paying the resources. in that case, you would also need to stake CHEX tokens in order to get access to resources on the network. So that's for like these people who have like market makers, for example, anyone with algorithmic bots who wants to trade on our platform, they all need to stake CHEX tokens as well. And then the amount they stake essentially tells you how rate limited they are in using the platform.
Gotcha. And you mentioned that Chintai will be operating on an EOSIO chain. Right now, the CHEX token has been issued and lives on EOS mainnet, if you will. What are the plans there? Moving to a dedicated chain? How will that be set up?
So the CHEX token is, in general, going multi-chain. We're in the process right now of making the CHEX token available on Ethereum and Binance Smart Chain. And when we launch our chain, it will also be transferable there as well. But essentially, like we won't be generating or creating any new CHEX tokens or anything like that. It'll be, if you have CHEX tokens and you want to use them on the Chintai blockchain, you simply call the appropriate action on the CHEX smart contract, which we will have a nice website for, that will say transfer them from the EOS mainnet to the Chintai mainnet, for example. And that'll be how you get over there.
So you're maybe one of the first to be leveraging the IBC, the inter-blockchain communication functionality that's kind of inherent in EOSIO and the ability to move between, or how does tease that out for me?
Yeah. So yeah, we basically because one thing I think is important is like it's very difficult, very difficult to build like an IBC solution that is as decentralized as the blockchains that they're running on. That's hard. But I think it's also important to understand that there's a difference between having a decentralized application on a blockchain and having a centralized application on a blockchain. And Chintai is a centralized application, right? Like, for example, we own the keys to the Chintai smart contract. We don't pretend that that's a decentralized like platform or anything like that. We control it, and that's a necessary part of being a system which is compliant as well. Like you can't have compliance and not also have centralization. They go hand in hand. Because the moment, for example, compliance is something like, you know, I need, like the authorities say, I need you to freeze this person's account because they're a known terrorist. If you can't do that, then you can't be compliant. And to be able to do that effectively, you need to be centralized, right? So we're building out like an IBC solution, but it's a centralized solution right now. It's not like, for example, the ones from like Liquid Apps, which is a decentralized and complicated solution. It's much simpler than that. But yeah, like that's in the works right now, and will hopefully be ready soon. The side of it for connecting to our chain, so the Chintai mainnet, is complete. The bit we're working on right now is getting it also to allow cross-chain transfers to Ethereum and BSC.
Very cool. That's a lot. You got your hands full.
Yeah. Yeah.
No pressure.
It's a lot of work.
No pressure. Thanks for taking a few precious moments of your time away to talk to me today. And let me know if you have a hard stop or if we still have some time to chat.
Oh, we have time. We can keep talking. I can't believe the hour's already up.
I know. Well, we kind of dragged our heels at the beginning, just chatting ourselves. But okay, so on one hand, you know, from a sort of a blockchain purist, a decentralized maximalist perspective, you know, Chintai is kind of this gateway into the regulated, centralized world. On the other hand, it's providing access to capital markets to retail investors that wouldn't ordinarily have access to those markets. So how do you see this dynamic of, you know, yeah, like what value does or will Chintai bring to the kind of, sort of quote unquote decentralized movement, while at the same time kind of being like a toehold in the centralized world of regulatory finance? Like, if you can understand where I'm coming from there, like, because you're kind of playing both worlds simultaneously in a
Sure.
way. You're acting as almost like an intermediary between worlds. So
Yeah, I think I get what you're saying. So I think part of it is the fact that our system is transparent and is designed to be fair for all. There's going to be no restrictions on our system that say something like, you can't take part unless you have this much money, for example, right? Which does exist in the actual real financial sector, right? The only restrictions that we will have in place will be the ones that are required by law, basically. Otherwise, it will be a free market, as far as possible. And as for the sort of current crypto space, and how that works, like we will be providing access to like these systems as well, right? So like we fully intend to, for example, list normal cryptocurrencies like Bitcoin, Ethereum, EOS, etc. on our exchange when that launches. We will be providing like an interface to all these systems, and really it's about like the efficiency gains and the ability to do it in like a way which is like cheaper, more efficient, more compliant. There'll be a lot of nice features for people who use cryptocurrencies right now when they come to our platform. Like, for example, for typical investors, like the ability to just immediately generate like at least at the beginning, a simplified tax report, right? That shows you all the transactions you made, your P&L, etc., etc. That's profits and losses, all that kind of thing. Yeah, so that's like at least part of it. And then we also have aspects of the system that just simply don't exist in a normal financial world. Like one feature I'm really looking forward to releasing is something very similar to how Uniswap works, except the difference is it doesn't require, like, just to briefly explain Uniswap in case anyone doesn't know, the idea is that you have these liquidity pools of two tokens, like say, for example, EOS and CHEX. And depending on the ratio of the supplies, if you add tokens to one side, it subtracts tokens from the other side, such that you can basically have almost infinite liquidity for each token pair, as long as you don't buy above a certain amount of the token, right? And this is how Uniswap works, and this is like a really interesting new like way of doing things, right? Like Bancor did it first, and Uniswap did it, and it's all really good. But like this doesn't exist in banks at all. Like nothing like this exists. One of the things we're building is a version of this automated market making system where each liquidity pool is unique and standalone. So typically, if you wanted to provide liquidity to say the EOS and CHEX pair, or to CHEX, you'd have to also provide it to the corresponding pair. So you'd have to do half CHEX, half EOS, right? Or half EOS, half Bitcoin, if that was the pair, and so on. And those liquidity pools are restricted to exactly those things that are connected. So, for example, if I had say, what's the current price of Bitcoin? Like in my mind, it's $50,000, whatever. So
it's down like 42 or something.
Let's say I had $42,000 and one Bitcoin. I could put those both into the system at once in the Uniswap system, and that would be fine. But let's say I didn't have that. I had two Bitcoin and no dollars. Well, in order to take part in Uniswap, I'd have to convert one of those Bitcoin to dollars and then add it to the system. Well, that Bitcoin and that $42,000 are only usable to trade between Bitcoin and US dollars. If I then also wanted to, for example, add EOS to the system, I'd have to add the equivalent amount of US dollars to the EOS pair, and the dollars I added for the Bitcoin, they can't be used for EOS, right?
Mm-hmm.
They're only for Bitcoin, and the EOS US dollars are only for EOS US dollars. Do you know what I mean?
Mm-hmm.
So we're creating a system right now where that's not the case. Where if you've got Bitcoin, you simply add it to the Bitcoin pool, and if you've got US dollars, you simply add it to the US dollars pool, and then it's tradable with all currencies equally.
So is this like what different, or maybe it's the same method that you're using, but you're talking about a single-sided liquidity pool.
Yes.
And what's different from how Bancor is doing it, or similar, or what approach are you guys taking there?
I think we're taking a simpler approach than how they're doing it. I can't remember the details of their methodology right now, unfortunately, but I think we have a pretty simple method for handling that. The thing I'm really excited about, though, with this specifically, is the ability to then do trading between any combination of pairs,
Mm-hmm.
where every pair will have relatively deep liquidity. So something I'm envisioning, for example, is we'll be listing real estate tokens on our platform, right?
Mm-hmm.
And let's say, for simplicity, we've got some real estate in Chicago, and I'm talking skyscrapers here, like not people's houses, skyscrapers, shopping malls, things of that nature.
Sure.
So, a skyscraper gets listed on our platform. Okay, fine. It's skyscraper, 1 in Chicago.
Mm-hmm.
Then another one, skyscraper 2 in Chicago, and another one, skyscraper 3. Good. Now we've got three buildings in Chicago. Then 3 buildings are done in New York. Well, this system allows for clever creation of index tokens. For example, we can create a token that represents all the skyscrapers in Chicago, or all the real estate in Chicago, right? And we can create another one which represents all the real estate in New York. And yeah, you're probably going to trade them against the US dollar. That makes a lot of sense, as a base currency. But with this system, you could also make a bet on, say, the real estate in New York going up in value relative to the real estate in Chicago.
Mm.
And it opens up this whole new level of analysis and trading that can be done that simply can't be done right now on any other exchange I'm aware of.
That's really cool. So would that technically be a derivative, or how? Yeah.
Exactly.
So
that would be a form of derivative.
Form of derivative. So yeah, so you could have liquidity between different tokenized, it's almost like a tokenized, like a basket of like an aggregate sum of values from different markets. It'd be like upland.me, only real world, like actual real estate trading between markets.
Sure. Yeah. And yeah, and it also it opens up opportunities as well that again aren't possible right now. If you're a day trader right now in crypto space, and you're doing futures, for example, so you're longing and shorting everything against the dollar, cryptocurrencies against the dollar. So you look at the analysis of each token and you say this one's long, that one's short, this one's long, whatever. And then Elon Musk comes along,
wrecks everything.
Yeah, he basically says Bitcoin is shit, and the price of Bitcoin goes down. It doesn't matter what all these other currencies that you long. It doesn't matter. They're all going down with Bitcoin. They're all linked to, they're all pegged to some degree to Bitcoin. So you may think that you can minimize your risk by doing small trades across many different tokens, but that doesn't really work if those tokens are all pegged to Bitcoin and Bitcoin goes down, they all go down, right? It makes a lot more sense to trade against, for example, Bitcoin. So EOS versus Bitcoin market looks very different, as a graph than, for example, Ethereum versus Bitcoin market looks like, right? Whereas they kind of all look similar if you compare them to the US dollar, because like they all just kind of have the shape of Bitcoin with minor variations in them. And by doing it like this, you massively reduce your risk, because like if the price of Bitcoin goes up or down relative to the dollar, it doesn't necessarily have any impact on like the difference between Bitcoin and EOS, or the difference between Bitcoin and Ethereum, right? So where I'm leading with this is that if you're a day trader, eventually I can then perceive that you could do technical analysis on token A against token B, regardless of what that token pair is. Our system will allow that. We won't have like a classical order book market for these token pairs. You know, you won't be able to like go to the, I don't know, like the you know, shitcoin A, shitcoin B, you know, marketplace and look at the order book and the depth and stuff. But from the AMM perspective, you will be able to do that. And you will be able to see what that chart looks like and make long or short bets on that, for example, using the automated market making system. I'm quite excited about that.
Yeah, that's awesome. So it almost sounds like it creates more opportunities for investors to hedge like into other forms of value that are maybe less volatile or less, you know, does it create more avenues for people, like say with real estate being tokenized or other commodities, does it create more opportunity for investors to protect their investments if, let's say, the dollar starts going crazy, or
Sure.
you know, Bitcoin starts dropping in dollar terms or whatnot?
Yep, and it allows you to make more educated bets on the market as well that you couldn't normally make. Like say, for example, you did tons of research and you figured out that the price of gold and the price of oil are both going to go up over the next year, and you think, great, I want to long both oil and gold, and you know you could do that and you'd make money, right? But if you also had the information that gold is going up, oil is going up, but oil is going up more than gold, there's no way in the current system for you to take advantage of that information. Like the ideal would be that you could long oil against gold, right? And that's simply like there's no market where you can do that right now. That doesn't work. We will allow that kind of thing. We also have some clever things as well, because one of the use cases of CHEX that I didn't mention, I'd like to mention briefly, is to provide collateral risk. So these liquidity pools that I mentioned for automated market making, obviously apart from potentially impermanent loss, like there's no risk associated with these liquidity pools. And I think even impermanent loss isn't a risk here either when it's single-sided liquidity. So
really quickly, I'm sorry, you have to explain impermanent loss just in case.
No, please don't.
I'm just messing with you. Okay, so I mean, I'll do it in a way that you don't have to take responsibility for. So, like impermanent loss is essentially what happens when you've got your tokens in a liquidity pool. You're exposed to the you're earning whatever portion of liquidity, but you miss out on token price value increase. Is that more or less the issue? Like
exactly.
You don't get exposed to token price moves, but you get exposed to the liquidity pool, and then you miss out on whatever those token price fluctuations are. So
yeah,
I think that's more or less the dummies version.
I always think I get it, and then I
all
think
the
about
calculus happening in your head is like threatening to unravel you.
Yeah, I like impermanent loss is one of those concepts that no matter how many times I think about it, I just constantly confuse myself and end up going, oh, yeah.
Yeah, I know. I remember.
I keep getting it and then feeling like I don't get it.
I know. I remember the first night I stayed up till 3 a.m. trying to understand impermanent loss, and I felt like I was going to go crazy, so I had to just go to bed. But, okay, so back to back to what you're talking about with Chintai, CHEX token being able to provide
collateral. Yeah.
Collateral. Mm-hmm.
So you've got your liquidity pool for your tokens, whatever they may be, right? And you would also, as a separate, like on a normal exchange, you would have a separate margin pool for tokens. The thing with margin pools is like you can lend your tokens into that, and other people can basically borrow them to do leveraged trading. And you can earn a fair amount of money by providing liquidity to that. The problem is there's a risk associated with it, because when you do margin trading, there's a risk of liquidation, and if too many people get liquidated at once and like it goes past the risk buffer, then if you put money into the pool, you don't necessarily get it all back. Hence the larger reward for providing liquidity there.
In that sense, you're betting on other people's leveraged bets, and it may not work out in your.
I mean, ideally, the exchange has a system in place that stops the liquidation from impacting the pool itself, right? So, like, the idea is you're getting close to the limit where you wouldn't be able to pay back the amount you've borrowed if the price didn't go the way you wanted it to. When you get close to that limit, they should liquidate you, and they should do that in a way that mathematically makes it very difficult for like a cascade failure where everybody gets liquidated and suddenly there's no money left in the pool, right?
Right, like a total systemic failure, basically.
Yeah.
Stop that from
It's
happening.
possible, but obviously shouldn't happen if in a well-managed system, ideally. So there is a risk associated with this. I would say it's like, say, depending on how the exchange manages it, low to medium, this risk, but therefore higher returns relative to like very low risk, like liquidity pool. So one of the systems we're building, which is one of the one I'm most excited about, is the CHEX collateral pool. So you put your checks in a special pool and say, this is the high risk, this is the checks in this pool will be used to cover the losses of margin trading if this event, this like systemic failure happened, which caused like a pool to completely collapse, or at some point go into a point where there was less money in it than should be. If that were the case, then do a conversion from CHEX to this pool, and the CHEX token holders take a loss, and the margin pool token holders can reduce their risk from low to low medium to very low. Right? The beauty of this is that then you can combine the margin liquidity pool and the Uniswap style liquidity pool. You can have one big pool, right?
I'm kind of lost now.
Okay. So you got the pool for doing like normal trading, like Uniswap style pool, single-sided liquidity pool for trading. Right?
Okay. Yeah, I'm not sure how they combine, but yeah.
Well, like, what's if the reason that you would normally have to keep them separate is that there's a risk with the one pool that it like could essentially lose money, and the other pool there's no risk of that, right?
I see.
But if you make it so that both of them are risk-free, why not just have them as one pool? Like, doesn't really make any difference.
And by using the CHEX token, you're essentially saying that the people putting checks into that pool are taking the risk so that it removes. Yeah. Okay.
Removes the risk on behalf of it. Decouples the risk from the pool and essentially moves all the risk onto the CHEX token holders who provide this collateral.
In exchange for whatever great returns they're earning.
Right. So now if you've got your tokens on the Chintai platform, here's how the system will work. You have, say, multiple tokens. All of them can be earning passive income for you, whatever you have. If you just hold Bitcoin, you can add it to the liquidity pool, which is also a margin pool, and you get a fraction of the liquidity trades, but also a fraction of the margin fees as well. Okay, so you can earn possibly significant returns just for passively holding whatever cryptocurrencies you choose to hold, or tokens you choose to hold. Now, on the other side, for the CHEX token, you're taking the risk on behalf of these people, and you should be rewarded for that. So a fraction of the margin fees from every market that exists will also be provided to the CHEX token holders for providing this high risk collateral, basically, right? Because obviously,
and this just provided to CHEX token holders that earmark their checks for that particular
yes, because
pool?
there is a risk.
Yeah,
Because
gotcha.
there is a risk for it, yeah, and therefore that's like more like a high risk, high reward pool that would exist, and that's
Gotcha.
one of the things I'm most excited about as well for like the CHEX token, because like things like this, for example, like the ability to provide liquidity and decouple risk, like normal banks can't think like that. Like that's beyond beyond the system that they're comfortable with and have been using for like hundreds of years, and they're too slow and to be this innovative.
Right. Yeah. In that way, I feel like Chintai is going to, as you enter the regulated space, kind of set a new bar for something that traditional financial institutions will probably come looking to you guys for how to provide some of these features. So that'll be kind of interesting to see. I hope that's the case.
Yeah, me too.
So yeah, so with checks, that previous example almost ruined me. Thinking about, okay, so in this scenario, checks, when I, let's say I put money into that pool for the high risk, I want to provide liquidity to this high risk pool that may be used for margin trading and such. Does the system over collateralize that pool then by like a certain like what measures will Chintai put in place to minimize the likelihood that whole pool gets wiped out? Like, say, I mean, apart from like stop loss measures, is there simply just enough collateral in the pool that it has like a giant buffer, or does it not use collateral in the same way that I'm thinking of it? Or
it uses collateral the way you're thinking of it, and we wouldn't rely on it simply having a large buffer. Like that would be, in my mind, reckless.
Right.
We basically have systems in place that will say like, what is the chance of a liquidation event happening? Like, or rather, how much would this token price have to change to cause a liquidation event that would affect a particular margin pool at all, right? Like, I'm not talking like a massive drop in the pool, just so that someone wouldn't get their money back, right? And if that point is reached, or is about to be reached, then we would essentially force liquidate people to prevent that from happening at that stage. Like the actual margin traders I'm talking about, we would force liquidate them at that stage. So ideally, it's something that never actually happens, but obviously no system is perfect, and things can sometimes go faster than you anticipate. Like you can get flash crashes and stuff like that, and you can't. It's impossible to promise that like we will prevent flash crashes from happening, because you think you've covered all aspects of the system. You can never promise it, right? So I would like to hope that in reality the risk is quite low, but yeah, you have to sort of multiply that low risk by the number of market pairs that exist, right? And then the risk is potentially higher. So I call it a high risk pool, but I'm not talking like 90% chance of all the money going away.
We're also talking to somebody that worked in the Large Hadron Collider here, so you're used to a certain level of like existential risk in what you do. like will we create a black hole that swallows the whole Earth? I don't know, but maybe we'll take measures to make sure that doesn't.
We did a test for that. You know what the test for that is?
No.
Look up at the sky. Because like the particles that collide in a accelerator, they are nothing compared to some of the particles that travel through space. Some of the particles traveling through space are trillions or quadrillions of times more powerful than the particles we were generating in the Hadron Collider. And space is big, and there's lots of these particles, and they've been hitting the Earth for billions of years.
Right.
and they've been hitting every star and every planet for billions of years, and not once has a black hole randomly formed and swallowed up a solar system or something. So
All right.
that
So
was the evidence we basically used, and they did the calculation, and it came out at like 0.2001 chance of black hole destroying the Earth, and we thought we'll take that risk.
okay, good. Well, that puts me at ease anyway.
Yeah,
Like, you may continue with that. Well, not you, but your former
yeah,
colleagues. So
yeah. Even if they made like the most powerful accelerator in the world, it wouldn't make an iota of difference to any of these kinds of risks.
okay, I feel better.
Good.
So I also feel better knowing that you're in charge of, helping to think about how to create a system that can minimize risk. I'm curious, given your background, are you all implementing systems at CHEX on Chintai that leverage like neural nets or some sort of like anomaly detection ability? How does that fit into what you're doing?
Sure. So part of it is like that. Um, Part of it is like anomaly detection systems and stuff like this. So like sudden massive change in price, or like change in number of orders on the books, or things of that nature, or whatever. Um, yep. Artificial intelligence we're using as well for something I didn't really talk about at all, which is like the soft compliance rules. So like transaction monitoring systems, um, like activities on the system that might look like money laundering, for example, would be detected by
Mm,
our AI systems, hopefully, um, and things like that. Yeah,
cool.
we still have lots of work to do.
Yeah, yeah. Well, it's probably never ending. I mean,
No, we're hiring developers right now because we're reaching the end of an investment round, a seed investment round,
oh yeah.
and
What kind of developers are you looking for? And now's your chance to like
oh,
put the
please,
word
good
out.
ones.
Good one. C
Yeah,
C C plus plus. What are you looking
yeah.
for?
So we're looking for front-end developers, C++ developers. We don't want to like restrict people from thinking that they should apply. So if you're listening to this and you're a developer and you would be one of the conditions is like eventually we would want you to move to Frankfurt, Germany, to our office, to the Chintai office where I am now. Um, so like yeah, eventually we would need you to do that because we want to have the workforce all in one location where we can better collaborate with each other. But yeah, we don't want to restrict people and say, we're looking for C++ developers, and then someone who's a really great developer but happens to not know C++ goes, oh well, I won't apply then.
hmm
If you're a good developer and you want to work in a like really cool, innovative team doing like really important, valuable work, um, then please contact us. careers@shintai.io. Message me there. I'll check it and get back to you. And like I say, don't worry about the skill set necessarily. If you don't have the skills we specifically need, then we'll train you,
Mm.
and that'll be a good opportunity for you to learn something new as well. And yeah, and that was the thing I'm saying now. Like as we're starting this hiring spree, is when talking to the new developers and the new potential applicants, it's how much work is there to do? And it's like, I have enough work for you for the next 5 years, like with a team 4 times the size of our current one. Like, don't worry, there's plenty of work. There's plenty to do.
Yeah. Has the team considered just cloning you and trying to like instill your clone with as much knowledge? Would that be shorter path or longer path? I don't know at this point.
I don't know.
Um, so, all right. I guess, we've talked, gosh, there's so much ground to cover. We could probably do a whole second interview. I don't want to, you know,
We can arrange that for another time. Like,
yeah, maybe we'll follow up and I'll have more time and maybe there'll be some more big reveals in the future for Chintai and the Chintai team.
mhm.
Any, I don't know, closing thoughts, things we didn't get to that you just kind of want to make the world aware of, or things that you're just super excited about with what you're building?
Yeah, I'm personally very excited to grow the team now, like the development team. We've been basically free developers for quite a while, and we're growing now to be about 12 developers in total. So quadrupling the size of the team is going to make a big difference to like the speed at which we can accelerate and get the product out there to people. So I'm personally very much looking forward to that side of things and
Awesome.
being able to grow out all the like functionality and all the features that we're gonna get in front of people. I'm looking forward to like the beta launch for the institutional investors in June. So like the idea of getting that in front of the institutional clients and getting their feedback on that before we show it to the wider public. I'm looking forward to that as well. Yeah, I'm just looking forward to. It's going to be an interesting year, and there's going to be some fun stuff happening in it, and I'm looking forward to all of it.
Awesome. Quite a summer coming up for you, huh?
Yeah.
And is Chintai also hiring, you said, for communications and marketing type people
Yeah,
as
we're
well?
looking
Or?
for chief marketing officer right now as well, and eventually we'll be looking for a fintech sales team in Singapore as well. Yep, like that's also the marketing officer we're looking for right now. So if any of you out there think you could be a good CMO for our company, also get in touch.
If they made it this far through the interview, I think they're really good candidates. So
Yeah,
we
you haven't bored them to death.
yeah, they haven't been bored to death, and they're still nodding along. One last question that I just thought of, actually I thought of earlier, but I know you've touched upon this on the, or you or David Packham talked about this, but what do you think, with the recent announcement of Bullish, Block One's kind of flagship exchange or whatever they're cooking up that we don't know the dimensions of it, like how do you foresee Chintai and Bullish playing together, or are they at odds with each other? Do they work together? Or how do you see that playing out?
I think they work together. I can't say for certain because I can't say for certain, but no, that sounded dodgy. What do I mean? What I mean is, like I haven't seen the product, so I don't know like the specific details of it. But from what I currently understand, from what's publicly available knowledge, I can foresee that there are synergies where we can work together going forwards. Yeah.
Cool. Like maybe as peers, kind of pushing into the quote unquote ProFi space a little bit.
Yeah, I hope so.
Do you all wear the mantle ProFi, or do you just think that's just like a marketing gimmick?
I understand like the implied difference between ProFi and DeFi, and I accept that difference. So yeah, I would say we're ProFi. Yeah.
Okay, cool.
Because as I say, we're centralized, we're compliant. We don't really fit into DeFi directly like that, only indirectly. But yeah.
Cool. Hey, well, thanks so much for taking an hour and a half out of your day to talk to me. I know I feel like I've set development back by too much. We won't talk about that. But the Chintai team is, yeah, you guys are doing great work, and I look forward to seeing your team expand and what comes next. We'll keep our eyes peeled for some interesting news in June, or maybe even earlier.
Maybe.
And yeah, maybe we should talk in June after the whenever your institutional clients get to kick the tires, and if you're ever at liberty to show what's going on behind the scenes, that'd be super cool.
Yep, I would look forward to doing that. All right.
Awesome. Thanks, Philip.
Thank you.
We'll see you next time.
Bye.